TFNN. Headline News Update. Here's Tom O'Brien.
Morning, everyone. This is Basil Chapman sitting in for Tom O'Brien. This is the 10 a.m. Everbank update. The Dow is down 36 at 20,917. It is into the gap. Remember the March 1st huge 300-point gap? So what we're looking at is 29.57 is the support, and 20,841, 20,841 is the lower part of the gap. And we're into it, sitting on the 9-period moving average, but the technicals are starting to deteriorate a little bit. And that suggests, and if I go quickly to the 120-minute chart, you will see that there have been a series of lower lows and lower highs. This is, in fact, in the Chapman wave. It's a Chapman wave 5 to the downside legs. See, now there could be a little bit of a bounce, but the MACD and stochastic are still very weak in the 120-minute Dow chart. Let's go back, and we're looking at support at 20,810 to 20,790 has been very important in this phase going into tomorrow, and 20,950 is probably the resistance to be looking at. The S&P right now is trading at, let me go to that, SPX, that's dollar SPX.X, is trading at 23.69, down 5, and it's just under the 9-period moving average. I suspect that we're going to looking at the S&P as well, doing lower lows and lower highs going into Wednesday, and I got a feeling that the Wednesday, even if there's a pop-up, that pop-up will be transitory. Higher rates should impact this market, at least initially, somewhat skeptically, and I think the market will be doing some pullback. So the S&P has support, goes under 23.61 to 23.58 support. That's going to be negative. I think at this point we're in a kind of a sideways move for most of the rest of the day. QQQ, that is the NDX 100. Trading down just 14 cents at 130.59. It's actually holding very well. But the technicals, funnily enough, are in fact deteriorating quite a bit. So that says that if the QQQ does not hold the 129.90 support, it could go down deeper. So I'm looking here again. Limited upside, probably a little bit more on the downside, and that's going to be the big test for the weekly charts all around. Those are the charts on the left of the dailies. The weekly is still leg D in the Qs, the S&P, and the Dow. Now let's go to gold. We're looking at gold, which is down. Gold has acted very poorly. It's down in leg B. This is, in fact, with the MACD and the stochastic on the left side, very negative. The weekly chart still holds some support between 1,210 to 1,190. But at this point, gold is succumbing to the selling pressure in the dollar rallying. The dollar's up 23 cents at 101.87. See, the dollar is holding that black line. That's the 9-period moving average with very strong MACD. Stochastic's good. But what we're looking at is as long as the dollar holds that support of 101.50, is at 101.89, good action, and it's going to impact the euro dollar and the and gold negatively at this point. Let's look at crude oil. Crude oil is, in fact, in that trading range between 52s and 54s. It's at 53, 56. I just think that crude oil at this particular point is just stuck in a trading range. But we must look at the TLT. And the TLT is the Lehman 20-year T-bond fund at 118.48. It's starting to work its way down. If the TLT starts to trade in the 117s, it's 118.47. That's negative, and that's going to push the interest rates higher, and that's why I'm saying this week we could be seeing tightness in all around as support levels are tested in the market, and we're looking at upside. I think is somewhat limited in the general market. We'll watch these yields very closely. So this is the 10 a.m. update, and you can go to the front page of TFNN, read all about everbank.com, and see it on the front page of TFNN. Basil Chapman. And thank you. Have a great day, and we'll see you tomorrow.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you could potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.